NVIDIA is reporting in just a few minutes. They're expected to earn 81 cents per share on revenue of $6.02 billion. Now, this is very exciting for a lot of people. Mo and I have a different opinion of it. Mo, what is our opinion of quarterly results?
Well, I don't really care what the company does quarter to quarter, except for the fact that I hope it gets abused in stock price and I have an opportunity to buy it. That's the only thing I care about.
Yeah, so if NVIDIA misses here and the stock falls, we want that because these are short-term things. We are long-term investors. Our goal is to look at the long run. No company will beat every single quarter. That's just the sign of a fraud. If they beat every single quarter, I shouldn't say that, but the point is, use the short-term voting machine that is the stock market to your benefit. If you're new to this channel, we do earnings results. We do earnings reports. We like to just talk about these earnings reports. People like them. We like discussing them because we like seeing the stock fall. If you look, someone's sending me a message. If you look right now, NVIDIA after hours is up 0.5%. This is our software right here. A couple things first. As you go through this video, our software, as you know, is awesome. And we are running a special, $7 for 7 days. And our software's price is actually going up very shortly. So if you're interested in changing the way you view money and having the tools that Mo and I use every single day for how we make decisions, this is the place to go. It has our 8 pillars, all the tools up here. So go to everythingmoney.com. You get all this. And so let's look at NVIDIA overall. Let's go to the 8 pillars off the bat.
Okay.
Now, Mo, have you customized your 8 pillars yet?
Not yet. I'm going to actually do it right now because, guys, what I'm interested in doing is, so we have our 8 pillars. These are 8 pillars that we use all the time for a screening process. And
by the way, the reason I'm asking Mo if he's going to edit his is these are basically my 8 pillars that Mo just puts up with.
What was the number that we came up with for the pillars that we can create in our software?
So, guys, you can edit the 8 pillars. There are 60 different options as of right now, and you can have up to 12 of them. It's literally 670, I believe, quintillion different combinations you can have of the 8 pillars.
So you can come up here and
or the 12 pillars if you want.
Click my pillars, and these are going to give you all different drop downs. I'm going to throw some different things in there. I'm going to put in there ROIC over the 12%. I can change PEs. The possibilities are endless, but that's what I'm going to do right now while you're going through these.
So for the 8 pillars right here, guys, shares outstanding. We don't want shares to be up, but this isn't a huge amount. Over 5 years to have less than 2%, that's not a huge amount. I don't care about that so much. But here are the big ones. 105 PE and 114 PE over the last 5 years. And the thing that bothers me about this, guys, is they had such a huge jump in revenue over the last few years. This is why it concerns me. Look at the jump in revenue. 12.4, 10, 15, 24, 28 billion. Now, look at the profit though. They did 4.7, 2.4, 3.8, 8.2, and 6. So I don't think the profit really matched the revenue growth. That's my concern with NVIDIA. And on top of that, it's selling for 105 times the average of the last 5 years earnings and 115 times the average of the last 5 years free cash flow. What does that mean? Well, if they replicated the last 5 years over and over again, and you bought this company, you're paying over 100 times those earnings and free cash flow numbers. Guys, it is very, very difficult to justify that, especially for a company of this size. Look at this market cap, $531 billion market cap. In order to justify such a high PE, you've got to believe the company's profit's going to go up by 50 or 60% a year for many years to come. It's just math, guys. Every investment is the present value of all future cash flow. I don't care what you believe about how great NVIDIA's chips are. It's hard to justify 100 PE on these companies,
really
especially with an established company.
Yeah, it really is.
Now, one thing I do like about NVIDIA, this is the market cap. Look at the enterprise value here, Mo. $547 billion.
Wow, I did not expect that.
So guys, what's the difference here? This is essentially the debt in between, the net debt, offsetting cash, et cetera. To keep it simple, they only have $16 billion essentially of debt. And that's why you only have long-term liabilities of 2.64 times the 5-year free cash flow. There's a lot of other great check marks here, really high return on invested capital. They don't have to invest a lot in their business to increase earnings as much as somebody else does. This 20% is huge. So Mo, what pillars did you put in there?
So I put in some very small ones right here. I did a PE. I raised it to 25, greater than 25. Obviously, that doesn't hit with
less than 25.
Less than 25. That doesn't hit with NVIDIA. ROIC greater than 12. That does hit with NVIDIA. Having free cash flow over the past 5 years. I like seeing that. But these are, guys, I just put these in right now really quick. You can change these to literally anything that you want. And that's the great thing. Now, coming over to the income statement, just something I noticed real quick. The revenue. This kind of worries me when I look at a company, especially in this chip space. It was growing slowly, and then all of a sudden COVID happened and it exploded and grew $10 billion in a matter of a year. And now we're at 28. So are we going to sustain right around here, this 28 to 24? That's something we're going to have to think about in a stock analyzer tool.
Well, look at this. Let's look at their income statement. Let's go by quarter, Mo.
Okay. I'm looking at the net income too.
So
the same situation.
Look at it this way. Their quarter ended January 2022 was 7.64. Okay. Their estimate is 6.02. So they're already planning for a 20% decrease. But that makes sense because there was such demand. Prices could be wasted whatever they wanted. So just like, we saw Intel, they had a big drop in revenue. This is NVIDIA. It's like these are, it's the same kind of area. And it's like, listen, there's going to be a drop in revenue.
And that's not a bad thing. Because the good thing was that it spiked in revenue. So it's just going to come back down to normal. That's not a bad thing.
So as an example, guys, look at Southwest Airlines, or any airline for that matter. Yeah. We didn't sit there and assume this was the correct number.
Yeah, exactly.
It dropped because of COVID.
Right.
Then it starts back up again, and now they're doing record revenue. But the same thing happens when it's overdone, like car industry. Like automobile dealerships, they skyrocket in revenue. Mm-hmm. But now, so these are the things that we talk about different in this channel. Another reason, sign up for the software, $7 for 7 days, everythingmoney.com. We are still waiting for these results, aren't we?
Yeah, we have about 30 seconds left.
Oh, 30 seconds.
Yeah.
I'm still in Southwest. That's kind of awkward. So back to the 8 pillars here for me. Guys, I'm just looking at these two things going, how the heck do you justify this?
That's really hard.
You should pay a premium for this. Oops, not that one.
ROIC. Yep.
For this one. You absolutely should pay a premium for a high return on invested capital business because 20% versus, let's say, 10%, this company has to invest half the cash to grow their revenue and profit versus this company. And they can use that extra cash to go buy back shares, pay dividends, etc. Mo, what you got? Anything yet?
No, nothing yet.
Wow. All right, let's check other things out. Let's look at analyst estimates for NVIDIA. Oh, wow, Mo. Analysts still have EPS going up over the next few years, over the next 5 or 6 years.
Wow. They're
expected to make $333 for the year on the quarter ending next quarter and getting all the way to $855 in 2028. But look, this is our software. Starts at 43 analysts, drops down to 4. So keep that in mind when you're looking at this. For revenue, wow, they're looking at higher revenue.
So it's basically double. Is it?
Yeah, doubling. Yeah, but they're actually looking at higher revenue this year versus the previous full calendar year.
Surprising. But hey, look how much it falls off there of a number of analysts.
It falls from 43 to 4.
Yeah.
So the question we have to, so I look at the number of shares outstanding, and I'm looking at this going, there was a big jump right here, 2016. They must have done some sort of acquisition. But the company is in such nosebleed valuations that I wonder if if they should still dilute owners. We don't want dilution, guys, but this is the risk you have when a company is overpriced like this. They can dilute the shareholders by issuing more and more shares to pay for their growth as opposed to taking on debt. Because let's say the shares are overpriced and they're going to fall 80%, hypothetically. As a company, you'd be like, listen, if we take the debt on, we owe the $1 billion in debt that we take on. If we issue $1 billion in shares, what do we lose? Nothing, because the $1 billion falls to $200 million. It's essentially like you sacrificed $1 billion in equity, but it was really $200 million in equity because it fell 80%.
Right. Nothing yet. People are still waiting.
Let's go.
That was the longest wait we ever had, waiting for a company to report. And the entire time I spent myself coloring in our board. So NVIDIA reported 88 cents versus an estimate of 81 cents and 6.05 billion in revenue versus 6.02. They are now up 3% after hours. It was down 1.2 at one point before they reported. I don't know why there was such a delay, Mo.
That was a big delay. It was supposed to come out at 420. It is now 450. That was weird.
That was very bizarre. We all thought, okay, they're
Twitter
missing
was
big.
awesome.
Yeah, Twitter was pretty funny. You should go search on Twitter what they were saying. And while you're at it, follow us on Twitter. Follow me on Twitter at Paul Gabrail. I don't think Mo's on it.
I'm on it, but I don't know.
Oh, now they're up 5%, Mo.
Yeah, it's up 5%.
Now, so here's the deal with NVIDIA. Their revenue is $6.05 billion. Okay, that's awesome. But like we said before, the same quarter last year, it was 7.64. It's a 20% drop.
Yeah.
Because the market, because the economy, there was such demand for the product. And then when the demand started to dissipate, because everybody got their stuff, revenues can be down.
So it's up from the last quarter. I wonder if it kind of stabilizes around the 6 billion number.
Oh, they're up 7% almost now. All right,
maybe there was a lot
7%.
of pent-up aggression to buy based on the 30-minute delay on earnings.
All right, so 110, 115 times earnings and free cash flow. Let's do our analysis. I'm going to do a 20-year, Mo. You do a 10-year.
Okie doke.
Pardon me. Now, the big key here is there's a drop in revenue, and they're going to guide on certain things. So it's hard to sit there and determine a 10-year or 5-year outlook unless you're going to – it's just going to be – like I look at it going, the PE is only going to get worse if the stock price goes higher.
Correct.
Because they're probably not going to report as good a number as they were before.
Right.
So I'm still going to do – actually, let's just focus on the 20-year.
Okay.
Why don't you tell me some numbers for the 20-year growth rates? Revenue.
5.
Oh, okay, that's low.
8, 11.
Okay.
Kind of spread it out. I mean,
Let's see what 11% for 20 years would take their revenue to. What's their revenue right now? They're on pace for 24 billion, call it.
Yep.
So taking them $200 billion. Okay.
That's
not
pretty
bad.
reasonable.
All right. I'm going to alter this a little bit.
Okay.
I'm going to go 5,
Okay.
10, and 15.
Okay.
Profit margin.
What are they sitting at right now?
Well, the last year they've done 21%, but previous 10 years and 5 years, much higher.
Yeah. Maybe 24, 27, and 30?
Can I alter slightly?
Sure.
20, 25, and 30.
Okay.
Free cash flow?
Do you want to do the same thing?
I don't think
Because it's
30
20
for free
years.
cash flow.
20 years should
Okay,
even out.
fine. Let's do that.
Okay.
PE.
14, 16, and 18? This is a
14.
difficult one.
Guys, and everybody's going to look at this going, but right now their PE is 86 and 106. Guys, if I wanted to offer you a Ferrari for $10 billion, you'd be like, there's no way. Fine, it's $5 billion. I just cut it in half. What are you going to say to me? It's still stupid.
Yeah.
These PE numbers are stupid for companies this large.
Yep.
Absolutely stupid.
Yep.
This is not going to be something that, unless there's some massive growth and the market's a major bull market for a long period of time, it's just going to be hard. And 20 years from now, remember 20 years ago, Intel was Intel.
Right.
23 years ago, Intel. Now today, Intel just hit the price it was last at in 1997.
Wow.
1997.
Wow.
So you'd have been break even, not including dividends. All right, now desired return, Mo.
10, 12, and 14.
Great.
Okay. These are going to be some bad numbers.
Actually, I think 10, 12 and a half, and 15.
Okay.
Because 15% growth rate's huge.
I agree.
Now, guys, before we show you the numbers, Tim is FaceTiming me. Before we show you the numbers, the stock is currently at 222, and we are going out 20 years. There's a lot of unknowns here. The more you go out, this is how wide your results are going to be. It's a very, very big difference. So you have to sit there and really remember there's going to be a very wide range here. But we did these really high numbers to see if the stock is even close to the price it should be at today. I hit the analyze button. Look at this, guys. Even with these huge numbers I put in there, a low price of 40, high price of 130, middle price is 75. And look where it is on my watch list.
Wow.
I look at this going, guys, this just has a long way to fall.
Yeah, it does.
I put in insane revenue growth, profit margin, free cash flow margin, PE, and desired return. Well, desired return might be, let's go see what intrinsic value is for that high end. 260.
And I will say, on October 10th of 2022, this was at $116.
And what was the all-time high?
All-time high was $289.46.
No, that was 52-week high. All-time high was
346.
346. So this stock's still down 33% from its all-time high.
We have this new thing in our software, 52-week low. Now
We've had that.
108. We have?
Yeah.
I never noticed.
Thanks for watching the software.
No problem.
All right, guys, if you like the software, sign up. Everythingmoney.com, $7 for 7 days. You will not regret it. Take care, guys.